Hello there. In this video, I'm going to talk you through moving from a sole trader to a limited company if that's what you've decided that you want to do. So through the presentation here, I'm going to talk you through the different steps that are needed to actually convert yourself from a sole trader to a limited company. However, there is no legal requirements for you to do that. It is personal choice. So is it worthwhile converting from a sole trader to a limited company? There are some great benefits to setting up a limited company. And the main one of that is that it is a separate entity from you as a person, unlike a sole trader where the business is actually you. So you are personally liable for anything within that business, whether it's good or bad. With a limited company, it's a completely separate entity, legal entity on its own. So there's the limited liability of this, which makes it quite attractive to people who have a lot to lose. It's not a one-size-fits-all structure, and it is entirely down to your preferences and your lifestyle and what you've actually got as your business model. Often converting from a sole trader to a limited company is a matter of personal preference. So you need to ask yourself, will I pay less tax and receive a higher take-home pay through a limited company? Will the prestige of a limited company help me attract more clients and grow my business? Could I benefit from my personal assets being protected should my business fail? Are these benefits worth the extra administration and filing requirements? So your choice of business structure very much depends on your circumstances and what you are comfortable with. So let me give you two examples. So we have two sole traders. Both are trading with turnovers of over 100K. One is married with a young family and owns his own home, and the other is divorced, lives on his own and rents a home. So the question here is, what are the benefits of going limited for both of these scenarios? Well, if you take into consideration that in 2023, the rate of corporation tax is going up from 19%, which is what it is at the moment, to 25%. Any companies who have a turnover of under 50,000 will actually still stay at 19K. But if you're at something like the 100K mark, that's a huge difference in tax liability that you've got to pay. So as far as I would say, my honest opinion, and this is coming in July 22, is that unless you have assets to lose that you could possibly be wanting to protect, i.e. from a lawsuit if something was to go wrong or something legal along those lines, then you probably are better off going limited, because then you've got the protection of having that separate entity, and your insurance will cover the rest of it, hopefully. But you personally and any of your assets will not be held accountable. Whereas if you have no assets to protect, if you rent, if you don't have a family and stuff like that, then it actually is, from a tax perspective, much better if you say a sole trader, at least for the next year or two. But we'll watch this space, because it could be that the corporation tax will come down. So moving to our next slide. So step one, register a limited company. The first step is to register a limited company by shares at Companies House, which is fairly simple. You sign on, you log in, and you click to register a limited company online. You will need your unique company name. So you'll need a name that your business is going to be known by, that's going to have the limited bit on the end of it. But you have to make sure that it is not being used at the moment, and it's not very, very similar to another company name that's in use. You'll need a registered office address. So you'll need to think, where do you want the world to know that this business at? So if you've got premises, that's fine. But if you've got your own home, it may be that you want to keep a PO box or use a registered address company for that. Now, you'll need at least one director and at least one shareholder, but these can be the same person. You can have one director who is the shareholder, or you can have two directors. So you could have husband and wife scenario if that's what is happening with you. You'll need to provide a service address for each director and shareholder, because that will need to go on Companies House. So again, think about where you want to register your address for. And then you'll need your standard industrial classification SIC code. So this is the code that's used to describe the nature of your business activities. So for pest control, the main ones that are in use at the moment, I've got notes down here because there's a lot to remember here. Most people use 81291, which is disinfecting and exterminating services, but there are a lot of others, and it is beneficial to you if you choose more than one here, so that you don't have to go back and redo your company's house information. Some people do use 1700, which is hunting, trapping, and related services activities, and there are lots of others here. There's environmental consulting activities, other cleaning services, support activities for crops, support services to forestry. It depends what you do within your pest control business. But if you'd like to have my list, then just drop me an email and I'll ping it across to you. But it's quite interesting what pest controllers do use and who knows what they're doing and who doesn't. So if we move on to step two is setting up your new company. Now you need to open a brand new bank account. You can't continue to use your sole trader bank account. It has to be a completely separate one. And you will need to tell the bank that you are a limited company now, because there are some ID for money laundering purposes that you'll need to do to prove that you are now a limited company. You'll need to decide on a date to start trading as a new business. And for me, the first of a month makes perfect sense, but it is best if you set that date sometime in the future, whether it's a month or 2 months, and then start planning to go live at that point. There are a lot of things that you need to do, so it might be worthwhile if you set a couple of months in advance, and then you'll be ready to go. Decide how you'll be paid as the director. Will you have a salaried amount, or will you take dividends, or both? You need to make a decision on that. And are you keeping the same business image, like logo and branding? Because if you are thinking of changing, then now is the perfect opportunity to do that for your new limited company. You need to review employee contracts if you have employees at the moment, and you'll need to change them to the new company name. So they'll need to have a brand new contract with a new limited name on it, and GP rules will apply. So they need to transfer across exactly the same employment contract as they had with your sole trader business. So step 3 is registering for PAYE and tax. So when your new company's been incorporated, that means you've actually set up your limited company on Companies House, you'll need to inform HMRC. So you will receive a letter from HMRC at your company's registered office address within approximately 2 weeks of your company formation, because Companies House will actually inform HMRC. This will contain information about your tax and reporting obligations, as well as your company's 10-digit unique tax reference number. Now, it's very similar, exactly the same, in fact, to the one that you have for your self-employment at the moment as a person, but this will be your UTR number for your separate legal entities. They are completely different. You must register your company for corporation tax online within 3 months of starting to trade through this new structure. And to do so, you'll need your company UTR, which is why you need that letter, and your company registration number from Companies House to hand when you go on the .gov website to register for corp tax. If you expect your VAT turnover, taxable turnover to be, and actually it's not taxable turnover, is it? It's normal turnover to be more than, my mistake, more than 85,000 within a 12-month period, you must register the company for VAT. So if you now are trading as a sole trader, are earning about £100,000 a year in sales, then obviously you're going to be needed to register for VAT exactly as you are for sole trader. The fact that you have moved from one business to another does mean that you'll need if you are VAT registered, I'll get my words out right in a minute. If you're VAT registered at the moment as a sole trader, you can transfer that number across, but you'll need to sort that out with HMRC, and it's a long process. Or you register your new limited company for VAT with a separate number, and then your 85k threshold then starts again. But if you know you're going to do that within the next 12 months, then you might just as well register at the beginning for VAT, and then you can collect all of the purchases that you have for your business, and it works out a lot easier to do it right at the start. To receive a director's salary and employ so I get it out in a minute, and pay employees, if you've got any, you'll need to register as an employer and set up a PAYE, which is pay as you earn scheme before the first payday. And you can choose to operate PAYE yourself using payroll software, or you can appoint a payroll provider to take care of this for you. So you can do your own payroll. There's no legal requirements for you to have a payroll bureau, but you do need to know what you're doing with regards to tax codes and all that sort of stuff. It is fairly simple for a simple a payroll structure, but you do really need to know a little bit about it. So I would advise you either do a short course, or you pay someone to do it for you. So moving on through, so that was me dealing with PAYE and tax. So you because it's a separate legal entity, you do need to make sure that you're set up properly with HMRC for the different taxes that you'll need to pay. So step 4 is setting up new accounting software. So when you move from a sole trader to a limited company, if you have a bookkeeper or an accountant and they use software for you, or you actually use the software yourself and do your own bookkeeping, you will need to set up a brand new account with that software provider. You cannot continue to use that software because that is under a separate name. If you want to keep that going, you can download all the information, or you can ask your software provider whether they have a scheme where you can continue to keep that as historical data and have access to it. But you will need to keep that for 6 years, all of your information there, especially if you're VAT registered. And it's much cleaner if you start off with brand new software as well, because day one it is completely separate from your sole trader history, so it's best to do that, as I say, as soon as possible. You'll need to add your new company name, your company number, your registered number, and the VAT number, and new bank details. So basically, you've literally got to set the whole thing up again. But with a lot of these cloud software systems, you can download your client customer information and even your supplier information and upload that to the new piece of software. So I'm talking about your basic name, address, telephone number, that sort of thing. It's very easy and simple to download it and upload it back again. So you don't need to sit there and type it all out, which is always good. If you're transferring assets, i.e. things like stock and equipment, you will need to move or decide on how much you're going to be selling the assets to the new business. And then you'll need to set up the asset register with all of those assets separated out with the actual cost of moving those across. So the amount that you're going to be selling them to the new business. Yes, you can. Yeah, so I forgot to say you can do those chart of accounts, but that's basically to make sure that you use all the same nominal codes that you were using as a sole trader. Now you're going to be using them as a limited company. So step 5, tell HMRC even, well, you have stopped being a sole trader. So when your new company has been incorporated and you're ready to start trading, so on that go live date that you've decided on, you'll need to tell HMRC that you are not self-employed any longer and that you will cease running your business as a sole trader. And to do this, you've got to complete an online form with the following details, which is the date on which you stopped being self-employed, your unique taxpayer reference number, your national insurance number, your name, date of birth, address, and the nature of trade. And you'll need to send a final self-assessment tax return as the sole trader by the 31st of January after the end of at the end of the year that you stopped trading. So if you stop trading in September this year, for example, you'll need to do a tax return in the following April, and then you'll need to actually submit that by the following January. So January 24, I think it is, yeah, if I work that out right. So step 6, transferring the assets. Now, you have to think long and hard about this. So if you haven't got any assets, it's fine because it's not going to worry you at all. But depending on the nature of your sole trader business, and most of my clients are pest controllers who have specialist equipment, vans, that sort of thing, you may need to transfer your existing business assets to your new limited company. Naturally, your new company is unlikely to have available funds because it hasn't even started trading yet, or trading very slowly, to pay for these assets. So in this situation, the most common approach is to create a director's loan account whereby the company will pay you, the director, for the transferred business assets over time. So you as the sole trader are selling all of your assets to you as the director of the new limited company. So therefore you, the director of the new limited company, owe the sole trader that money. So you won't have that money, or possibly won't have that money at that point that you do the transfer. So you open up a loan account to say that you're going to pay yourself as the sole trader in some time in the future. However, transferring certain assets may trigger capital gains tax liability, which is based on the market value of the assets at the time of the transfer. It's unlikely for a small pest control business to have assets over £12,300, which is the threshold, unless you own vehicles or expensive equipment or have many employees. So with assets, we're talking about the value of a van. If you own the van, most pest controllers, I think, will either own or lease their vans. If you've got stock that's valued a lot of money, but again, it's unlikely to have, unless you're a large pest control company, to have stock over 12k. But you'll be surprised when you add them all up how much it does actually come to. So you need to think long and hard about what you're going to be doing with these assets. But depending on your specific circumstances, you might be able to reduce or defer the capital gains tax by claiming some form of tax relief, such as incorporation relief, business asset disposal relief, which was formerly entrepreneur relief, or holdover relief. I would suggest at this point you either talk to a bookkeeper or an accountant and get some advice on which would be the best form of tax relief for you to claim if you can. But as I say, most pest control companies probably won't have assets of over 12k, so you might not have to go through that. But it's just worth noting that that could come back and bite you in the bottom if you don't do it properly. So step 7 is shout it to the world. So regardless of whether you've registered a new company name or continue using your existing business name, you will need to inform several parties that you have changed the legal structure of your business and you'll now be operating through a limited company. So these people are called stakeholders. That is their legal term, and you will have to notify them that you have now changed and are trading as a limited company. So presumably any employees that you've got or subcontractors that you have will know, because you've spoken to them, that you're going to be trading as a limited company going forward. But you must actually inform them in writing, not just verbally. Customers and clients, it's always good if you let them know on a verbal phone call or a Zoom call, or definitely by email. It must be, well, I would suggest that the client relationship, you should really do it by email or telephone. Also, suppliers and service providers will need to be told, because at the moment, if you have credit accounts with any suppliers, i.e. you are given payment terms, then they need to know that you've changed your legal trading name and that you are now a limited company, because they may have a separate process that they'll need you to go through to complete credit term forms again. And because you're in a legal contract with these suppliers or service providers, then you are legally bound to tell them that that's what's happening. Banks, lenders and other finance providers, exactly the same. You have a legal obligation to tell them that you are now trading as a limited company. Lenders, you will need to have a specific conversation with them, because they might need to redo any loan contracts that you have and anything like that. So it's best to tell them as soon as possible up front. Landlords of any business, all of these interested parties, these stakeholders, you are keeping everybody abreast of all the important changes to your business, and you're minimising any risk of confusion or voiding contractual agreements, and ensuring all paperwork and invoices contain the correct details. You may also need to provide your new business bank details to certain parties, like customers, because they will need to have your new bank account, otherwise they're going to be paying into the wrong account. See, the one thing that worries me about making sure that you inform everybody is that these contractual agreements that you have, i.e. with suppliers, you don't want a supplier putting you on stop, for example, and you not being able to go and get pesticides or materials that you desperately need. So, you need to think about it and get it done as soon as possible. So moving on to step 8, then you need to start thinking about closing down the old business, your old sole trader business. I would suggest that you start running it down. So it could take a few weeks or even a few months, but as you're now trading as the new limited company, you should start. We won't be using the sole trader business, so there won't be new sales coming in, so there won't be that. But there might be things that you need to deal with, such as supplier invoices that need to be paid, or debts that need to be collected that belong to the sole trader business. So you can't transfer any balances. So if you have the balance as a sole trader, it cannot be transferred across to the limited company. So you'll need to make sure that you pay those get the customers to pay those first, or pay your supplier invoices under the sole trader before you, I suppose, in sync with the limited company ones that you're now starting to get. You need to transfer any balance of money from your sole trader bank account into your own as drawings, and not forgetting that you will have income tax and national insurance to pay on that sole trader business in the following January. So the following January after the last tax return. So this is where it gets complicated. So as I say, if you shut down the sole trader business in September, you will have a self-assessment tax return form to do in the following April, and that needs to be submitted and the first payment made in the following January, so January 24. So there's a lot to think about, and you have to think about your cash flow. I'm well aware that this is going to impact your cash flow quite a bit, so you need to make sure that you keep some money in your old bank account or your personal bank account to pay that income tax and national insurance for that last trading year as a sole trader. Once you've done that, you can close the old bank account, and that is you done. So I hope that you've enjoyed that video, and I hope it's answered some of your questions, if not all of them. But if you have got any questions left over, then please feel free to drop me an email or send me a message on Facebook. I am a bookkeeper that helps pest controllers become more profitable and help you grow your business. I have a YouTube channel which gives more help and support, and this is where you found this video, hopefully, or maybe you've seen it on Facebook, or maybe you've seen it on my website. But if you've liked it, then please hit the like button, and if you want to, you can subscribe and then be notified of any new videos that I put out. If you did enjoy the video, please share it to anybody you think might benefit from watching it. My name's Julie Holland. I run Blue Bookkeeping, and as I say, I like to do a lot of work for pest controllers and help them to grow their business and become more profitable. So thank you for watching. I hope you enjoyed it. Take care.